Hello guys, welcome to my channel once again. In this video I'll be talking briefly on market structure. A lot of people don't understand what market structure is, and they are wondering what they are doing wrong, that they are not making money in the market. They are not making money in the market. Before you make money in the market, you need to understand what a market structure is. So that is what I want to teach you in this video. So in this video, basically I teach you those strategies, and I share my strategies with you on this channel. So if you are enjoying this, I would like you to subscribe to the channel so that anytime I drop a video like this, you know what I'm talking about. So let's go into the video without wasting much time. So market structure has to do with the trend of the market, how the market is moving. So you can either have a downtrend, uptrend, or a ranging market. If the market is in an uptrend, you see something like this, 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 something like this, something like this, something like this, something like this. So as you can see, these are the market structure. You can see here we have this this low here, we have higher low, we have higher low. This one is higher than this previous low here. So you have this one is higher than this previous one here. So you can basically, if you are trading a trend line, you can basically connect these lows here and then be able to trade in the direction of the market. So basically this is how a market structure, an upward market structure, looks like. So if you are trading the market and you see something like this, you will only be buying in this market. If you see this move here, this impulse move here, as a price action trader, you wait for the market to retrace, you wait for this pullback into your trend line, or you can put your moving average your moving average can serve as a dynamic support. So when you see your market coming down to your trend line or coming down to your moving average before you start buying, because basically if you buy this market here at this point here, and all in this retracement can take you out of the market. So that's why you have to wait for the market to come down, retrace, before you buy. If you are buying here, your stop loss will be somewhere here, which is you'll be having 1:3 risk to reward ratio. So this is how an uptrend market structure looks like. So when it comes to the downtrend, you see something like this, see something like this, see something like this. This is basically how a downtrend looks like. So in this case, reverse is the case. You can see this high is here, lower low, lower low, lower low. So these ones you can either connect them using your trend line or a moving average. So basically this is how the downward market trend looks like. So in this type of market, as it is shown here, you will only be selling in this type of market. You will only be selling in this type of market. You don't have to buy here. If you are buying this market, this is the only thing you will get at this place here. You will not have much gain. So in this type of market, I advise that you only be selling. So in the gain, we have the sideways market, where the market is ranging. In this one, you have something like this. You'll be having something like this. This is basically what you will be having in this type of market. So here you have your support. This is your support, and then this is your resistance. This is your support and this is your resistance. This is your resistance. We have support, support, support. This is your support, and then this is your resistance. Resistance. We'll change the color to red so that you can see it very well. This is your resistance. So in this type of market, you draw your line like this, waiting for the market to come back to this place. So when the market comes here, you enter your market for the buy. When it reaches here, you take your profit, and then if you want to still sell, you can sell from here, and then set your stop loss above this range here, and then set your stop loss if you are buying below this range here. So basically how I teach my students is that you should only buy at this level to minimize your risk in the market. So don't go and be, if the market is somewhere here, don't buy, because if you're buying here, your stop loss will probably be here, and the risk to reward ratio will not make any sense. So this is basically how the market structure looks like. It's an uptrend, it's a downtrend. Don't mind my drawing. This mouse is giving me some issues, but yeah, I think you can see that this downtrend consists of lower lows and lower lows. So here we have higher highs, and higher highs. So in the ranging market, the market is basically dancing within the range and then all this market. So these are the basic market structures we have, and these are the basic ones you need to know as a beginner trader. These are the basic ones you need to know. So there's one thing I also want to show you. Let me erase this. I want to show you something else. Okay, this video is taking long. I don't want it to be long. Okay, so now I want to show you, for a market to reverse, you have to watch out for something like this. You want to create reversals, this is something you should be watching out for. This is an uptrend market, So before this market will change direction, it must make something like this. Sorry about that. Let me draw that again. Before this market will reverse, you watch out for something like this, 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 something like this. Or you watch out for something like this. So here, basically, this is what we call triple top. These are reversal patterns you need to watch out for as a beginner trader. You need to watch them out if your market is in an uptrend and all of a sudden you see this triple top, you should be looking for reversals. So in this one, we call this a double top. As you can see here, this market has shown a double top here before the market reverse. So mostly these are the patterns, the reversal patterns you can see in the market, and they work a lot. They work very well. So these are the things, as a price action trader, these are the things you'll be looking out for. And then this thing same applies to the triple bottom and then double bottom. You just a reverse of it. If you just come here, so this is So this is a triple bottom. It's a this is a triple bottom. It's a bullish reversal pattern. It is a bullish reversal pattern. Sorry guys, this my mouse is giving me issues. I will have to let me use the brush. Yes, this is a triple bottom. It's a bullish reversal, triple top, double top, and then double bottom. So these are the bearish, and then these are the patterns you will be watching out for, watching to look for as a price action trader. These are the pattern you do watch out for. So I will come to the chart and show you some examples. Look at this guy. This is what we were saying. As you can see, this is an uptrend. As you can see what is happening here. As you can see, this is an uptrend. It's an uptrend. So basically this is how I draw my trend line. I draw my trend line touching the wick of this. So if you remember your secondary school or primary school mathematics, before you can call something a line, it must have 2 points. So when the market give you this point here, you draw your line, and then when it give you another point, you draw. Okay, you need this point and this point to make your line. So you've seen this point and you've seen this point again. So you draw your trend line. If you're a trend line trader, you draw your trend line and extend it, waiting for the third touch, which is here, which is basically here for you to enter your trade. So when the market comes to this third touch, you can see what is happening. Look at this candlestick here. Let me submit this. I'm coming. Look at what is happening here. Look at this pin bar here. This is indicating a bullish presence because sellers took this market to this point, but buyers came in and pushed the market higher. So as a price action trader, if you look at this candlestick here is confirming to you that the retracement is over in the market. So at this point, you can go all in we can go all in, not minding what will happen, and then allow the market to do its thing. So as a price action trader, these are the things you'll be looking for and in the market. So basically this is an uptrend, as I was showing you on the other side. So this is an uptrend you'll be looking out for. Okay, so basically this is a downtrend, as you can see here. This is a downtrend. As you can see, you draw your trend line. So in this case, let me delete this other trend line so that I will not confuse things. So in this case, you draw your trend line. This one line here. If you adjust your trend line, you'll be able to trade this market. But yes, you trade this market on this third touch. If you make your trend line from this point to this point, you'll be able to trade here and here. If your trend line catches here and then catches here and here, you'll be able to trade on this third touch. So coming back again, you can see how this trend line was broken and then the market changed the structure. So from downtrend to the uptrend, because this trend line was broken, and as you can see, You can see this, or the pattern they form here. They make a support level here. If you can draw this level earlier, you can also trade it. And then basically this is how it works. So again, one thing I want to show you in this chart is the double top I was telling you, which is a reversal pattern. The reversal pattern, one of the important reversal patterns in the market. As you can see, look at this double top here. The market was coming, basically the market was coming, so you see, it's actually a triple top, not a double top. But if you look at this pattern, you'll be able to trade it based on what I've teach you so far. Now the market was moving somehow in an uptrend here, as you can see. So it made this double or triple top, as you can call it, and then the market started reversing. So basically, this is how you think of the market when you are into the market. You need to understand market structure if you'll be able to make money in the market. Look at the downtrend. If you have been selling this market here, all this movement, now you'll be making money for yourself. Remember guys, this trend is your friend. You should be able to follow the trend. You should follow the trend because trend is your friend. Trend is your friend. So I don't want this video to be too long. I will have to end the video here, and I will see you guys in the next video where I'll be teaching you how you can trade this uptrend and then downtrend. So basically, this is what I've taught you. I've taught you about the market structure, how the market moves, and then we have the ranging market, which is here, and we have also have triple top, double top, triple bottom, and all of this. So subscribe to this channel as I'll be sharing more of my technical analysis tips and then the strategies I use to trade in this channel, as I'm fully back to the channel to teach you guys my trading strategy. So this is TradingView implementation for daily. It's the best platform where you can actually do your analysis and then enter your trade in the MT5. I will also be teaching you how you can also find this in my next video. Peace out.